Two of the most popular stocks on the planet right now are electric vehicle manufacturers Nio and Tsla. Together they trade about 200 million shares daily, thanks in large part to young individual investors hungry for a piece of the action. But these stocks are decidedly not the same. Today we will check out Nio stock price and Tsla stock price major updates. Number 5. Nio Stock. China-based premium EV maker Nio is racing in the world's largest EV market with its 7-seater and 6-seater electric SUV ES8, 5-seater electric SUV ES6, and the recently launched 5-seater electric coupe SUV EC6. Nio investors have hit the jackpot as shares have gained about 1,028% year-to-date. So what has fueled this unbelievable rally? Well, the reasons include a strong third quarter, bullish outlook on China's NEV, new energy vehicles market, and media reports about Nio entering the European market with the launch of its ES8 and ES6 models in 2021. U.S.-listed shares of the Shanghai-based electric vehicle company slid 7.2% after Nio said it would sell up to 69 million new shares. According to estimates from Deutsche Bank, the new share offering will raise more than $2.5 billion. Earlier this week, Tsla said it plans to raise $5 billion through a new stock offering. A year ago, Nio Inc.'s dwindling cash and sputtering sales had the electric car upstart on the brink of doom. Fast forward, and the stock's 11-fold gain in 2020 has pushed the Chinese company's market value past General Motors Company. No other company better illustrates the swift shift in consumer and investor perception of electric cars than Nio. Skepticism over the technology's viability has turned into a race to pick the winners, with Nio and main rival Tsla Inc. among the top candidates. With China's electric car market expected to expand rapidly over the coming years, investors are betting that Nio will thrive even as competition intensifies. Yet, success is far from guaranteed. Nio's sales volumes are still minuscule compared with bigger auto industry rivals. The company has never turned a profit as development and marketing costs rise, and price pressure is getting tougher. Another wave of price cuts for premium electric vehicles in China may be on the horizon, stirring up what could be an intense rivalry. Bloomberg intelligence analysts led by Steve Mann said in a November 11th report. Number 4. Tsla stock. Tsla is firing on all cylinders, and the EV pioneer is taking the right measures to sustain its global leadership. Following pandemic-led disruptions earlier this year, Tsla bounced back in remarkable fashion, with a 44% rise in deliveries to 139,593 in the third quarter. CEO Elon Musk called it the best quarter in history. Tesla's long-awaited inclusion in the S&P 500 and 5 consecutive profitable quarters have led to a meteoric year-to-date rise of 609% in its stock. The company is now focusing on cutting its costs and improving its profitability while investing billions of dollars in capacity expansion at the Shanghai factory and new factories in Berlin, Germany, and Austin, Texas. Shares of the electric vehicle maker dipped 2.7% following a downgrade from Jefferies. We don't believe Tsla can dominate the industry given the latter's size, structure, and politics, the firm said Thursday evening in a note to clients. Jefferies did, however, raise its 12-month target on the stock to $650 from $500. Tsla is the safer bet overall, while Nio's faster recent growth and unique innovations, such as a battery-as-a-service (BaaS), which allows customers to subscribe for car batteries rather than paying for them up front, are no doubt interesting. We think it remains a riskier investment compared to Tsla. Nio is focused on the Chinese EV market, which is extremely competitive, with several hundred players. Scaling up production quickly is also not going to be an easy task for Nio. The company has also faced quality challenges in the past. Last year, it recalled about 5,000 vehicles after reports of several fires, and it remains to be seen if it can scale up production while maintaining quality. While Tsla stock also looks somewhat expensive, the company's well-established and desirable brand, its industry-leading tech and software differentiation, and fast-improving profitability could offer a better margin of safety compared to Nio. Tesla's business model looks compelling, and margins are poised to rise further, driven by declining battery costs, improved self-driving capabilities, which could drive software sales, and better operating leverage. Tsla is also innovative. The company is working on a truck, and its vehicles can be charged from virtually any electrical outlet. However, Tsla has also had its share of complications, including batteries catching fire, and Elon Musk has been controversial as CEO. Perhaps the most famous stumble was his statement when the company's cash flows were a concern to investors, funding secured, which was proven inaccurate later. Number 3. Battle of the EVs. Tsla is not shorthand for EVs. As an analyst at Roth Capital Partners said in November, Tsla is an umbrella stock that is tied to all other names in the sector. Electric car companies may be selling more shares than cars at the end of 2020. Amid an explosion in stock prices of electric vehicle manufacturers, Chinese EV company Nio Inc. NIO, plus 74%, announced Thursday afternoon that it plans to sell at least 60 million fresh American depository shares, with an additional 9 million shares available to underwriters. Nio Stock dropped more than 4% in after-hours trading following the announcement. Nio's move follows similar offerings by 3 other public EV companies in roughly the past week. Tsla Inc., TSLA, plus 1.7%, announced a $5 billion at-the-market offering Tuesday morning and completed that stock sale within roughly 24 hours, according to a filing with the Securities and Exchange Commission. It was the second $5 billion stock offering from Elon Musk's U.S. electric car manufacturer in 3 months, and third stock offering of the year. Despite the momentary dips amid stock offerings, EV stocks are enjoying a 2020 stock surge. So far this year, Tesla stock has gained roughly 650%. Nio shares have increased more than 1,000%. XPeng shares have gained more than 111%, and Li Auto stock is up more than 97%. And Li Auto stock is up more than 97%. The S&P 500 index, SPX, plus 0.64%, has gained 13% so far this year, and plans to welcome Tsla into its ranks later this month. Number 2. Price prediction of Nio stocks and Tsla stocks. The Nio Inc. stock holds buy signals from both short and long-term moving averages, giving a positive forecast for the stock, but the stock has a general sell signal from the relation between the two signals where the long-term average is above the short-term average. On corrections down, there will be some support from the lines at $46.81 and $46.89. A breakdown below any of these levels will issue sell signals. Furthermore, there is a buy signal from the 3 months Moving Average Convergence Divergence, MACD. Volume is rising along with the price. This is considered to be a good technical signal. Some negative signals were issued as well, and these may have been some influence on the near short-term development. Several short-term signals, along with a general good trend, are positive, and we conclude that the current level may hold a buying opportunity, as there is a fair chance for Nio Inc. stock to perform well in the short term. From AI System, total return is 1,378.94% from 1,017 forecasts. Forecast for February 2021 is $49.20. For January 2022 is $61.52. For January 2024 is $105.39. For January 2026 is $122.78. And for January 2031 is $164.10. Since closing price on 12/31/2020 is $48.74, and forecast for January 2022 is $61.52, Nio Inc. Class ADR stock is a good one-year investment. Number 1. Conclusion. Electric vehicle stocks have had a solid year, as investors put a premium on growth stocks while betting that the disruption caused by COVID-19 could make the shift to EVs harder for mainstream automakers. Tsla, TSLA, and Nio, NIO, are due to report key sales figures in the next few days, along with XPeng, XPEV, Li Auto, LI, and BYD Company, BYDDF, Tsla and Nio Stock were two of 2020's biggest winners, with Xpeng, Li Auto, and BYD also delivering triple-digit gains. Auto sales rise and fall with consumer confidence, and automakers' profits rise and fall with sales. Because automakers, even innovative electric vehicle makers like Tsla and Nio, have such high fixed costs, a moderate decline in sales can be enough to entirely erase even a financially strong automaker's profits. And given the age of the current cycle, a significant decline seems likely in the not-too-distant future. Given that neither of these companies is sustainably profitable now, it's hard to make a case for either under the circumstances. If you believe in Tesla's longer-term growth story and think that it's likely to muddle through whatever economic storms lie ahead without a trip through bankruptcy court, then it might not be a terrible buy in current prices. But if sales start to slip, you might be able to buy it for much less in a few quarters. Tesla's technology, innovations, leadership in the EV space, and improving profitability make it an attractive long-term play. However, the street is essentially sidelined on the stock mainly due to its sky-high valuation. And as several critics point out, the role of emission credits in making Tsla profitable in recent quarters. The street currently has a more favorable near-term outlook on Nio Stock. That said, investors need to tread carefully due to lofty evaluations, especially for a company that is not generating a profit yet. While both Nio and Tsla have strong potential, nothing is guaranteed. Right now they are forerunners in their respective markets, but competitors are coming. Porsche is hot on the heels of Tsla with its Taycan model that has proven extremely popular among car buffs. So much so, inventory has ramped way higher. Time will show whether these electric car manufacturers can hold on to the market share they have already acquired, or if the introduction of electric vehicles from larger, more established companies will ultimately eclipse their efforts. Do let us know in the comments among which one of them you are interested in buying. Please subscribe to the Stock Advisor. Thanks for watching.